So first, this presentation will be talking about how can we accelerate Africa's development in a multipolar world. And as usual, Africa was ahead of the game before we started seeing the significant polarization in the current geopolitical environment that we have. And His Excellency, the chairperson of the African Union, the former chairperson of the African Union, and Dr. Akinwumi Adesina, the president of the African Development Bank, 3 years ago, commissioned us to look at what those key actions would be for Africa to accelerate inclusive growth and sustainable development in Africa. So my presentation will be in 2 parts. First, in 4 parts, what's the context and rationale for doing this study? And how has Africa performed looking back into history and looking forward as much as we can see? And then the challenges and opportunities we must overcome, because for us, we debated amongst the team, we often hear a lot about the challenges that Africa faces. But actually, those are the flip sides of the opportunities for transformative growth on the continent, if only we harness them well. So that's why we put challenges and opportunities together. Then the strategic actions that we're required to take in order to move forward. First, what is a multipolar world? And I just want you to pause and think about it a little bit, because if you go into the literature, you find, depending on where, who is writing and from what perspective, some arguing for unipolarity. A lot of people are in consensus that bipolarity is not good because you have 2 elephants fighting and then the ground suffers. But when you have unipolar world, maybe you have a benevolent leader in that unipolar world, and then that's good for everyone. But also, a lot of people also, you have different perspectives about multipolarity, which is what we are increasingly seeing the world moving into today. To be clear, the polarity is defined by the distribution of power. And as Africans, I just want us to keep thinking about the key words and what we need to do about it. Because quite often we run around in conferences and in meetings and in negotiations talking about which one is better, unipolarity, multipolarity. But do you have the power to be part of that polarity? So that's one key thing that this study is trying to help us do in terms of at least one of the key drivers of people who control that power in the economic system, in the global politics, and in the global cooperation system. 3 things always come out in literature. One is military power. And it comes out so much because the issue about the polarization of the world started a lot in the 1940s when the United States had every chance, and I have to give credit, to be a unipolar world if they wanted to exert the power they had. But they chose multilateralism. They chose to give voice to all the people, even the warring factions in Europe, to sit around table and craft what we now know as the global, the rules-based order for managing how the world makes decisions. So military power is very important in defining your role in the world, whether it's multipolar or unipolar or bipolar. Then the second point is economic power, fiscal dominance, which again is interlinked with the military power, because when you have significant fiscal space to invest in the military infrastructure, you have the opportunity to exert dominance and power over your peers. And the other one is commerce, in terms of the production and sales of commodities. And if you think, as I'm talking, you know which institutions the world created that time to ensure that there is no unipolarity, some of which are now under threat. We have the United Nations created. The sole purpose is to maintain peace, no more wars. We have the World Trade Organization, which was created. What was the purpose? Free trade. So don't let nobody dominate the trade on the world, and so on. And then we have several multilateral Bretton Woods institutions created to ensure we have the World Bank, we have the IMF, we now have regional banks and so on, to ensure that development, economic development, reaches everybody. So because we are discussing this with the perspective of how to accelerate Africa's development, let's start translating those questions to how to accelerate Africa's participation in the global military architecture, in the global economic architecture, and in global commerce. Because if we don't have the powers to be part of that, and I speak frankly because I'm in the African house, and my sister here tells me I'm free to speak. So if we don't have the power to participate in that, you are just outside the room where the decision making is being made, and maybe carrying placards. Decisions will be made and it will influence you. So but what are the effects of either being in the room or not being in the room? If you look at the history of polarization of global governance, you'll find that it's caused, when you start seeing geopolitical shifts in all these three issues that I have raised, you start seeing fragmentation that we're seeing today in trade rules, in security, and so on. You start having states who maybe ignore the general rules that brought the multipolarity together and pursue individual interests. You start seeing volatility in markets because money is very shy. And once you start not knowing what is going to happen tomorrow, investors start trying to go to the safe haven, and it creates uncertainty. And if you want to look at what is the greatest factor that will shift economies today, it's not trade tariffs alone. It's the uncertainty that is being created in the trading system of the world. So that rising uncertainties will lead to systems, uncertainties in ownership of assets, in systems of governance, in how people work together, in decision-making, and all those things. And all these things is already happening. Then you see reallocation of capital. If you watched the markets in the past since the Freedom Day speech by President Trump, you can see that we started seeing a change in how capital flows in the market when there is turbulence. Before, you normally see capital flight to safe havens. What were the main safe havens? The dollar and gold. But what we're seeing now is a flow of capital into other currencies. So is that telling me that the world is moving towards multipolarity? I think you need to think about it. But as Africa, the question is, where are we in all those dynamics? Where are we in all those dynamics? Or shall we continue to remain spectators? Well, I know that we can spend the whole time talking about multipolarity, unipolarity, bipolarity, and the geopolitics, but our business is actually about growing the continent so that we can have the economic power that allows us to get military power, but also allows us, for the third thing, to participate in global commerce. So His Excellency, the chairperson of the African Development Union, and then Dr. Akinwumi Adesina had seen the future, I would say, by commissioning this study, so that we can look at what are those key things that have been preventing us from not being at the table, and how we can get a seat at the table. So that's the purpose of this. And already, Patrick had already mentioned to us Again, wind back 2013, Africa had seen the future and had this Agenda 2063, which had very clear actions that we need to take. Some argue that the timeline was too long or too short, whatever, but it was an action, a vision of how to get Africa a seat at the table by growing an Africa that is inclusive and growing at a fast rate, and actually mentions 7 to 10%, above 7% GDP growth, consistent over time. Ironically, when you check in economic analysis, you find that there's greater consensus that for economies to be able to break the vicious cycle of poverty, which my sister talked about, which is deepening in Africa today, you need a growth rate be above 7% for a minimum of 4 to 5 decades. So then they set this as an agenda for us in this study. Go out there, tell us what Africa needs to do in order to move its growth rate from this current 3.8% on average or 4% on average to above that 7 to 10%. And that made it also in the UN agenda. The African Development Bank came up with key strategies on deepening infrastructure to achieve that. That was a high-five strategy of President Adesina, the African Development of the African Development Bank. But as I've said now, the current growth rates we have is far less than the 7%. As you will see in the study, we find cases where some countries have tried to approach or exceed this 7%, but it doesn't sustain for more than 2 decades. So we call those growth spells failed takeoffs. Why was it happening? How can we stop it from happening again? These were the questions we were grappling with. But there were some countries in Africa that has not even tried to get there. What is happening? So we need to understand that. And my sister has already laid out for us those bold actions that needs to be taken. And I wrote down this your quote. If I had heard it, I would have put it on the slide. Our greatest risk is not to aim too high and miss, but to aim too low and achieve mediocrity. It is important for us to think about it, because whatever I've presented is, some people say, oh, these are bold agendas, bold ideas. It will never happen. Okay? So let's get out from this mindset of mediocrity and incremental development. Incrementalism also doesn't lead to transformative change. And what we need is transformative change on the continent. Then I go forward to ask some of those questions. How have we been performing of recent in Africa? I'll run through it very quickly because a lot of us are very conversant with Africa's performance now. We'll look at growth rates on the continent, and you'll find that the continent is doing well compared to other regions in terms of real GDP growth. We are second only to Asia. But being second only to Asia is only on real GDP growth, because when you now think, Africa is the red line there, please. So if you now think of GDP per capita in terms of how fast is our growth rate outpacing our population growth rate, we are not doing well. We are trailing all the other regions. So which says that the position of you and I today, if we continue business as usual, is better than the position of my children, which is a bad thing to think of. Every father, every mother wants the child to have a better life. But what we are having is that we're not growing at a rate that is providing a projection of a better future for our children, because we're outpacing our growth rate. So per capita incomes are very low, trailing other regions, and because of that, poverty is increasing, insecurity is increasing, and many of the odds that none of us want to be associated with. So how have we performed? Is this just a spell, what happened just now, or how have we performed across the decades? So we looked at different decades, and we can see that real GDP growth in Africa, if you went back 1960s, we're not actually much better than we are now. So again, this figure is telling me, maybe we have had successes, But those successes have not been enough to make a step change, to lift Africa from here to here. So what you then start hearing, some decades of Africa rising. But I always made a joke when I saw that Economist publication on Africa rising. I say, you only rise when you fall. If you are on top, you don't rise. You're already there. I want to find an Africa that is staying at high pedestal, not the one that will celebrate its rising, but only after a short time, it falls back again. So we have episodic growth performance, I've already mentioned it, averaging only 4%, far below the 7% that is required. And we have volatility in our GDP growth. And when you look deeper, you find that that volatility is because of lack of economic diversification and huge exposure to shocks, both internal and global shocks. And if you look even deeper, why that exposure is happening is dependent on commodities, the price of which we do not control. So we need to we'll start seeing the things we need to change if we want to be at that level of growth that we need. What I've just told you, the volatility, you can see it. My colleagues in my team said it's a spaghetti. Yeah, it's just going up and down, up and down, and up and down. And if you try to track when it went up, commodity prices went up. When it goes down, commodity prices goes down. So it does then seem to me that we are just spectators in the global market. So if the price of oil decides to change, Nigeria does well. If the price of oil decides to fall, we have a problem. So something is fundamentally lacking, and that's technology input to our resources. So we need, if we have to move forward, stop thinking about rejoicing that prices of commodities go up, but actually thinking of how to convert those commodities to produced capital that delivers higher returns to us. Instead of trading at the lowest end of the value chain, and maybe we take 40% of a low end of the value chain, but those who bought those raw materials from us will go back and get the remaining of it. So we need to think about that very quickly. And then endemic poverty, low SDG outcomes continues to remain there, but because of the fundamental structure required for growth, human capital, natural capital, and other things that we have in Africa, we find that we remain resilient. Because if you fall, you still have the oil. So when prices rise, you sell, then you rise again. So, but what we are not doing is our interaction with the resources we have. How we use our human capital, how we use our natural capital, and also to generate financial capital and build technologies that now combines to lead us to higher productivity growth rates. That is not happening. So because of that, we see similar patterns of volatility on our inflation or exchange rates. Every indicator you look at on the continent, you see volatility. So one question is, how can we stop just trailing what others are doing, but actually shaping our own destiny using our own resources? So if you look at all these, and that's why when you now have such volatility, risk premium goes up. And Africa, on this side, you find that Africa is paying like 3.5% more than its peers. And this is not peers like Africa and the United States. It's Africa and other emerging countries that have the same characteristics like Africa. We can complain about rating agencies, but there is a reason why that is happening. It's not just discrimination. There are fundamental socio- and microeconomic factors that define that perception of risks. Volatility is one of them. So we need to deal with that. Now, and because of that, the fiscal space on the continent is never enough to drive growth in growth-enhancing sectors. Human capital, health, agriculture, energy, infrastructure. In all these things, we sing songs about financing gaps. Every sector you look at, the financing gaps in Africa is huge and increasing. Why? Because of the reasons we've given before. So the continent, it becomes then a vicious cycle, because the little revenue that the continent gets 8.4% of it is now higher, up to 13.3% of it as at 2020-2023 goes to servicing debt we borrow as a buffer to the lack of fiscal space so that we can do basic development. And because of that, you don't have resources remaining to invest in growth-enhancing assets. So you then start borrowing to pay debt. That's a big challenge. And we're losing more than we get from the global community every year on servicing debt alone. In 2024, we had 74 billion. And it keeps rising from 17 billion in 2010 to 74 billion. And the shifts in the global geopolitics we have is now one that is shifting to the private sector more than concessional long-term financing. It will deepen this challenge even more because interest rates payable for commercial loans is always higher than the ones you get from public resources. And also the term of the loan is always shorter. So higher refinancing risk is bound to happen if we don't change the game for ourselves. So, and if you, I've already mentioned this, so if you now start looking at external financing, which we are all very good at chasing, by the way. In Africa, there's something I call the distraction policy. Every smart person in Africa chases grants. And I'm saying, so what time do we have to think about transformative growth-enhancing strategies for Africa? Because you have to write that proposal, you have to write that report, and not for one. Sometimes you are writing 10, 15, 20. I was a CEO of a research agency in the African Technology Policy Studies. One day, maybe I tell a personal story. I struggled to write a report that was due by 5 p.m., finished writing the report, 3-year research, $6 million grant back those days, submitted it. I was driving home. My home is like 15 minutes from my office. I drove home and I got an email. It's been approved. So I picked up the phone and called this program officer, who's a good friend of mine. Did you get my report? He said, oh yeah, we have just approved it. I said, did you read it? He said, oh, Prof, we don't have to read your report. We know it's good. I said, excuse me, why did I have to write it? And not me alone. I had professors from 27 universities across the continent with whom we did the work. So you spend a lot of time chasing grants, writing research reports. When are you strategizing for growth in your continent? So we need to think about all those things. And then the flow of those resources we get is low and going down. FDI going down. ODA, the time we wrote this, we said it's going down. I don't even know. I don't know whether it exists anymore. It just continues to go down. So we need to rethink where we put our priorities. Domestic resource mobilization is the key. Because there, you mobilize what you have and you utilize what you have for your own priorities, not for agendas set for you by donors. We keep going forward. And when you now come to combine, what do we lose from what we already mobilize on the continent? And what do we get externally? After they did this research, I asked my team, please go back and check. You must be wrong. We are losing on poor risk perception and risk assessments on Africa, $74 billion every year. If we use that 2024 we talked about. About 90 billion, my sister has talked about it, illicit financing flows out of the continent. Corruption, about 148 billion. Some put it at a very higher figure because, you know, corruption is a nebulous thing. How to track it is even more challenging than tracking it effectively. International profit shifting In our markets, we just had a session on taxation and global tax cooperation and the need for us to tighten on that. We're losing 275 billion. If you just sum these ones, flows that can be measured, 587 billion each year. The year we did the analysis, 2022, we got in total from portfolio flows, from ODA, from FDI, and remittances, 174 billion. Do your own math. It means that every day Africa is losing 1.6 billion US dollars and getting 570. So the net outflows is huge. Why? Poor institutions, lack of capacity to retain what we mobilize, including our human capital. We're just talking about financial flows here. So the best of Africa is outside of Africa, including the best of Africa's money is outside of Africa. So for us to actually achieve the ideals of the Agenda 2063 and gain a space in that global geopolitics of defining who is there to define the polarity of the world, we need to at least block those leakages. But then we keep hearing of Africa being a high-risk environment. That, again, is not true. This is research done by Moody's Analytics, what you have on the left there. Default rates on long-term infrastructure financed in different parts of the world. And this is not 1 year. It's a long-term research that they did. Africa is there, 1.9%. Look at Western Europe, 4.6%. Asia, 4.6%. North America, 6.6%. Eastern Europe, 12.4%. Yet Africa pays a premium. So I'm asking, if you are a lender, why do you charge higher rates to where there is no risk for default? Again, if you are not sitting at that table, making those rules, you are the meal. You are the, somebody says, if you are not at the table, at the dinner table, you are on the menu. So Africa is on the menu. I'm sorry, it's not a laughing matter. So when you see a vicious cycle, it continues. That leads to high cost of capital. So poorer countries are paying higher to access resources, to do infrastructure, to do health, to do all those things. And it continues to put a strain on our fiscal capacity. We cannot invest in infrastructure. We cannot invest in health. We cannot invest in human capital. We cannot invest, we cannot invest, we cannot invest. And that leads back to the poverty that we see as a vicious cycle on the continent. So the reason for action, for that call made by the AU chairperson and the President Adesina is so clear. If you look at it here, just look at the debt, because this is a conundrum for the continent. It's a vicious cycle I've talked to you about. And the systemic challenges that this causes in Africa is like you are digging a hole on the banks of a river. The more you try to come out, the more you are sinking. So you find structural transformation is slow and uneven. We did a full report on this in 2024. Go and look at the African Economic Outlook 2024. Then SDG and agenda outcomes off track. Close to 9 to 10 Africans will be in the extremely poor by 2030. You look at all these things, it will take over, if we continue business as usual, it will take us a century to come out of our quagmire. So what then are the key findings? We have external challenges, we have internal challenges. I will not talk about the external too much. The internal, state capacity, institutions, and governance. Let's deal with this. It's within our capacity to improve our institutions, hold our public officials accountable. Infrastructure investments, we lose of that small resources we get, our public infrastructure efficiency is, inefficiency is 39%, which means we are losing even more from how we invest. The business environment, the business capital development is there. Trade and regional integration, we are still only at 15%. We have the ACFTA. We need to rapidly scale implementation. human capital development and utilization is also another issue. And then implementation and monitoring and evaluation is a key problem. I'm rushing because I'm being told the time is gone. So what are the actions we need to take? I would actually almost prefer to stop here so we can focus on what our sister had picked out, those 5 actions that she picked out that we need to focus on from the report. But just for completeness, let's focus on having our own homegrown policies for economic sovereignty. And that sovereignty is key. We have political sovereignty, but do we have economic sovereignty? Domestic resource mobilization and effective utilization, I've talked about it. Scaling investments in human capital formation, she also talked about this, and the type of investments we need to make. And then also reinforcing regional economic integration and collective voice. State capacity and institutions and governance, I've also talked about it. And in order to address the debt question, the African heads of states approved the work that's been led by the African Development Bank on establishing an African Financing Stability Mechanism and Africa Credit Rating Agency. That's already ongoing. And there are so many other things that we need to do. We need to stay the course on economic reforms that is happening across the continent and also prioritize industrialization and entrepreneurship and innovation. Changing mindsets becomes very key. Not thinking that somebody from outside will ever come to do it for us. We have been thinking that for all these years. It never happens. It has never happened in any country. Development is a do-it-yourself affair. So let's do it ourselves. And then international community also, what they have to do for us is important because we don't live in an island. Mindset change is very important. So far, Africa is a market for resources, for human capital, for every other thing, but not a growth pole, which it is. And actually, if the world wants a common good for everybody, we need to harness the growth opportunities on the continent. Making the global finance and debt architecture nimbler and more inclusive, we have talked about it. There are specific things that needs to be done, and I have to say the MDB reforms is addressing a number of those already, but mandatory requirements for measuring the green wealth of countries, expanding how we measure our wealth is very important. We had a session on that yesterday. Scaling up low-cost concessional financing for Africa's development is very, very important. I sit in rooms and we're talking about private sector coming to the rescue, and I'm thinking of cost of capital increasing in Africa. The only way to counter that is to capitalize MDBs like the African Development Bank or the African Development Fund, put more resources there so that it can use more risk capital to de-risk the environment for the private sector. Because the private sector will never come in if it's not coming to make money. And if it's coming to make money in the current environment, the cost of capital will shoot over the roof and debt vulnerability will continue. So these things that I've talked about is the precursor to leveraging the private sector for transformation, which we are being told to do, and then our access to emergency financing, SDR rechanneling, climate finance, and all those things needs to be simplified so that Africa can have access to it. When you look at it, sometimes Africa gets access to like 1% of what it needs in order to move forward. But all this doesn't also say that Africa is not acting. Of all these recommendations, you find that there are so many things Africa has done already, policy-wise. It's implementation that needs. We have the ACFTA, we need to implement. We have the African mining strategy, we need to implement. There are so many strategies we already have, and we need to just keep implement, and until we get a seat at the table. Concluding words, I like Einstein quite much. And he says that in the middle of all these difficulties lies the opportunities. Let's not be daunted by the challenges. Let's see them as opportunities for transformation on the continent and not try to do business as usual. Because doing business as usual and expecting the same results is what he also defined as insanity. If you do the same thing over and over and expect a different results, for him, you're mad. Now, Africa has what it takes to drive development above 10%. The resources we need is already being mobilized, plug in the leakages to keep it, is very key, and that is what we need to do. So the study comes with first challenges that we have, but then inspired optimism in the sense that we have very small policies to do to actually retain the resources and valorize those resources to develop at the rate that we're supposed to be developing. And the final word for me would be, let's join hands and make this happen.